Hey guys, welcome to another. Hey, we're just going live. Today we're talking to the apartment king, it, self-appointed, I think. But you
Hey, that's
guys,
not true. Right.
no.
What am I?
How'd you get the title?
Hey, look, man, let's start off. I was sitting around with my buddy Robert Helms with the real estate guys. You may have met him at one of my events. And he brought me out on stage at one of his events like 6 years ago, and he called me the king of apartments. And then we sat around and I'm like, Robert, I love that name, but I need something a little bit more compact. And he's like, how about Apartment King? And so that's how the name Apartment King started, actually.
I love it. Well, you're definitely the man. You've built an amazing organization, lots of education, really surrounding multifamily, and so I really encourage anybody and everybody. I mean, we're going to get way more into your background and everything else, Brad. But this is Brad Sumrok, the Apartment King. I think you even have like that on your license plate on your car. Is that right?
Well, hey, that's the other thing. Like, King of Apartments does not fit on a customized license plate. And in Texas, you could have 7 letters on your customized plate. I never had a customized plate in my life. Okay. It wasn't my thing. But when we went from the King of Apartments to Apartment King, I thought, hey, this would be a pretty good opportunity for a customized plate for branding. And you know how many people have stopped me or when I got out of the car and they were like, hey, like, you do apartments, tell me about it. So it's actually been a really good um, way to brand myself and to stimulate conversation like at gas stations and stuff like that from other professional people.
That's hilarious. I love it. But I mean, you keep getting bigger. I know there's some articles. There's one that's coming out in the Wall Street Journal pretty quick here. So that's exciting. Good things happen in your world.
Yeah, we're not supposed to talk about that until after
Okay.
the article comes out.
Sorry.
So
Sorry.
yeah, that's okay. We'll come back on after that comes out. Um, but yeah, there's going to be an article coming out, so we'll be looking forward to that.
I love it. Well, while we're waiting for people to show up, I've got some just horrible dad jokes about multifamily to tell you. Hey, did you hear about the last remaining unit in the apartment building for lease? Well, it was last, but it's not leased. Yeah.
Ba-dum-bum-bum.
Did you hear the joke about the apartment roof? I mean, I doubt you'll get it. It's over your head. Yeah. These are, like I said, perfectly dad jokes.
Wow.
Hey, did you like your new studio apartment? Resident responds, well, I have no room to complain about. All right. That's as horrible
Nate,
jokes as I will do.
Nate, this is why you're an expert in syndication law.
My stand-up skills are the absolute complete worst. So thank you for being there for this true letdown of comedy. But let's roll into really there's exciting things happening. It's been a crazy last 12 months in the multifamily world. If anything, that's creating some, I think, just really amazing opportunities over this next year, which is truly why we're here today and really focused on multifamily, the investing, and where the opportunities come up there. We're talking to one of the biggest, best known apartment gurus, the investing gurus, not just on the passive investors, but honing in the skills, the opportunities to start GPing, making more happening in your own multifamily deals, Mr. Brad Sumrok. Maybe you could give a whole lot more insight of who you are and what you do than that.
Yeah. So look, thanks, Nate, and glad to be out here talking to everybody today, or anybody watching this in the future. So just a little background about myself. Look, I thought I did everything right. I studied hard. I got good grades. I went to college. I got a degree. I got a job. I went back to college. I got another degree. I got a better job. And for 14 years, I worked in corporate America. And I've had, some successes and some setbacks, just like anybody else. But what occurred to me was after losing my job, not one time, but two times, I realized that doing everything right, wasn't giving me the results that I wanted. I found myself in my early 30s, not feeling secure, not feeling financially stable, certainly not being at where I wanted to be, in terms of my income and financial success. And so I started to, scramble a little bit. And I actually, Nate, you may know this or maybe you don't, but I actually started preparing to go back to school for a third time. And I was preparing for the law school entrance exam, the LSAT, and I was taking preparatory classes for that.
Oh, what a
And
horrible
look,
idea.
I mean, tell me about it. So it's like, but look, this is what I learned was the framework to succeed was go to school and study hard and get a degree. And then I did that once, became an engineer. And then when I wanted to advance in my career, I got an MBA. And then when I was stuck after losing my job twice and, but wanted a better life, I put into practice that same framework. And thankfully, I had a big change in my life. And that change was reading a book called Rich Dad, Poor Dad by Robert Kiyosaki. And and then his second book, The Cash Flow Quadrant, really changed the trajectory of my life. And I can say this, it wasn't the book that changed my life because, how many of you have read books and they're sitting on your shelf and we call them shelf help books, meaning like you bought the book and it's sitting on your shelf and you didn't take any action. And so it wasn't just reading the book, but it was the action I took after reading the book. And the action I took was I sought out real estate investing education. And so I went to real estate seminars. Okay. And I learned the fundamentals, the foundational concepts of rental property investing. I learned single family investing. I learned multifamily investing. And when I went into that seminar, I was the most skeptical person in the room. On day one, I sat in the back with my arms crossed, thinking, like, what am I going to learn here? By day two, I was in the front of the room taking notes. And somehow, just about everything the guy said made a lot of sense. And, I took their seminar, I joined their program, I became a member of their investor community, and I took massive action. And within 8 months, I had bought my first investment property ever. And it wasn't a single family home, a duplex, a fourplex, an eightplex. I didn't house hack. I didn't live in one unit and rent out the others. I was back in corporate America working and I bought a 32 unit building and the rest is history. So I bought that 32 units back in 2002. And since then, I've done over 10,000 units. I've invested as a general partner or a deal sponsor. I've invested as a limited partner or a passive investor. And I've bought my own deals with my own money. And so I understand the nuances, the logistics of all three, the pros, the cons, the work involved, the financial rewards involved, the risks involved. And I've been there and done that. I've been through some tremendous up markets and made millions of dollars. And I've been through some challenges in, the down cycle we had in 2008, 9, and 10, and the one that we're in right now. So like, look, I've been committed to this industry for 22 years. And because I started going to seminars, that's how I got my start. In 2013, I decided to launch my own multifamily education platform and mentoring company. And we are far beyond like just doing coaching and mentoring. We've created an entire investor community with nearly 1,000 active members where we all share wins and challenges. Sure, we have coaching. We bring in people like yourself, Nate, like industry professionals that help us with our students, with matters like legal and debt and insurance and management and utility optimization and everything an apartment investor would need to be successful, you'll find in the Sumrok program.
Let me ask you a few things. Like, I know you're a part of a different educational group. I think one of the most important things to do is you're getting into real estate. Be part of an education group. Be surrounded by the like-minded people. I mean, how impactful was being a part of a community to your own journey?
Well, look, it to me, it makes all the difference in the world. Like, let's just be clear. You could do everything yourself and you'll pay a price for that. Okay. The price will be a lot more time. Like, imagine trying to build your own network of over 1,000 active investors. Imagine, having to learn everything on your own through trial and error, which could be very costly. Imagine how much time it could take you to learn the concepts. People think like, hey, I could go on for free and go to Bigger Pockets or go to a meetup group and read books and learn stuff for free. And there's a certain amount you can learn for free, but to learn a proven system that actually works and then have unlimited coaching sessions to guide you through the process, especially when not just when things are going well, but when there's challenges. And there's always challenges. There's challenges in up markets and there's challenges in down markets. So it makes a huge difference. Like in terms of the time it'll take you to learn them on your own, avoiding trial and error, and really just leveraging something like the community I've built has taken me literally millions of dollars in over a decade to build. So like, why not shortcut your time frame and leverage somebody else's decades of, time in millions of dollars. Okay. So it's huge. It's everything.
And I think it's really important for everybody to understand you've built a community, there's 1,000 investors there, and being a part of the community, it's not just about the investor side, it's also really about learning how to GP, how to manage a deal, how to capitalize a deal, how to underwrite a property. Kind of, can you tell a little bit more about if somebody was interested in participating, kind of what different things do they experience and learn about?
Yeah, well, a couple things. So I saw you flash a thing up there. So
We'll get to that in
yeah.
a second here, but because there is a conference that you've got going on, we'll talk about that more in just a second here.
Well, let me just share. I'm going to share a slide here. Let's see if this works. And what I want to share is, let's see. I'm going to do this and then that. So, can you see the 3 ways to invest? Okay.
Now, absolutely.
Yeah. So, look, one of the things that I think is important within the realm of multifamily investing is, where do I start? And so the nice thing is you could start in any one of these boxes. Okay. The way I started was I did 32 units. And so if you look over to the right, it says individual or direct ownership. So no, I didn't own title in my personal name. That's not what I'm talking about. You always, Nate, you're the attorney, but before I knew you, when I got started, like my real estate attorney was like, you should never own the property in your own name. So when I say be an individual owner or direct owner, what I really mean is you buy your own deals with your own money. So my first deal was 32 units. I was the only investor in the deal. I still held title in an LLC, just to be clear. And so, that's one way to get started is you buy as many doors as you can with the money that you have. The problem with that is there's a lot of limitations. There's limitations in terms of the amount of loan you could qualify for. There's limitations to the amount of money that you have in the bank. So like, let's say you have $100,000 to start. Well, in today's environment where you'd probably need to put 40% down, 100,000 in cash to invest is only going to get you a $250,000 property. And so you might be looking at like a 2 or 3 unit building, which, technically is a multi-unit building, but it's still under, 5 units. And so it's still valued. It's not valued as or appraised by a cap rate and NOI model. It's valued by a single family comparative market analysis model. So if you have 100,000 to invest, there's a better way to do that. Now, if you have a couple million to invest, sure, go and buy your own deal with your own money and hire your management company and you have immediate scale, but most people don't, Nate. So like if somebody had 50,000 or 100,000 to invest, I'd want to bring them over to where it says group purchasing and syndication. And so, with 50 or 100,000, you could be a passive investor with somebody else. And some people start that way. They're like, hey, before I go out and do this on my own, I want to get into a deal with somebody else. And there's a great advantage to being a passive investor. And the main advantage is you're passive. Like besides getting educated, which is not completely passive, but passive investors, they need to get educated and they should be part of a community of investors so they get to meet and get to know, like, and trust who the general partners are, who the deal sponsors are, so that not only could they have the education and the training to vet the deal, like the numbers and the projections, but they should also have a personal vetting process, i.e., like, what are the characteristics and qualifications of the people that you want to invest your money into? So that's passive investing. Or, look, I got to clear this up. Many people think, hey, I need to buy my own single family or duplex or triplex and then work my way up. You know this to be true because you've done the legal work for a lot of my students. A lot of my students will take that 50 or 100,000 and start immediately on the general partnership team. Okay, the general partnership team means you're on the team or you're the individual doing all the work. Okay, and what do GPs do? Well, they find the deals, they analyze the deals, they make the offers on the deals, they negotiate the contracts, they do the due diligence, they raise the capital, they get the deal closed, they handle all the paperwork, they do the legal documentation, the PPM, the company agreements, they communicate with the investors, they bind the insurance, they hire the management company, and then once the deal closes, they oversee the capital improvements, they oversee the asset management, they oversee the property management company. So being a GP or a deal sponsor is not a passive role, okay? But the benefits are really lucrative, and I teach that, and I want to show the slide here on the differences. I think it's really important that people understand, the differences, and so let's see here. Well, this is a great example. Could you see that?
Let me bring it on up. There we go.
Sharing the screen again. So I was talking about the 3 ways to invest, and on this slide, I wanted to compare and contrast how, like, a $50,000 investment, and again, and this is not on any specific deal, and these numbers could be worse than this, or they could be better, but this is like typical over me, doing this for over 2 decades. This would be typical of what you may expect if you invested $50,000, where as a passive investor, over a 5-year period, that 50,000 might be projected to be worth 90,000 through a combination of cash return and sales proceeds. The same 50,000 on the general partnership team could be worth 900,000. So we've all heard of the guy that walks around talking about 10x, and the way the Grant Cardone does that is that he's on the general partnership team. So when he buys a deal, he's getting the acquisition fee, he's getting a return on his money, he's getting a GP split or carried interest, or however he structures his profit splits between passive investors and the GP team. He has asset management fees, okay? And so there's a lot of different ways you can get started. And, well, let me just go back. There's not a lot. There's only 3 ways you could get started. And you could buy your own deal with your own money. You could be a passive investor, or you could be on the GP team. And that slide that I indicated shows you why so many people are drawn to be GPs in the beginning. But look, just to be clear, it takes time and energy and effort. Like it takes commitment, and GPs need to understand that.
I'd like to throw out there, yeah, you can buy your own property. Maybe you've got 200, 300, a $500,000 to actually invest, which gets you something great. But once you start working with OPM, other people's money, you're still getting 100% based on your own investment, because you're getting that investor side, you're getting the GP side, you're still getting all of those same benefits, but now all of a sudden you're participating in the profits and you're growing from the other people's investments as well.
Right.
Yeah, there's the
Yeah,
income, which is great, but there's
sorry.
that true upside. Sorry, go ahead.
That's okay. There may be like a half-second delay here in my headpiece. And it's interesting because one of the questions I get asked is like, well, Brad, if I have enough, let's say I got, $1 million and I could go out and buy a $3 or $4 million property. Well, first of all, I would say, look, you need at least 60 units to have any sort of economy of scale. So like in today's economy, if you're going to buy in markets where like I like to buy, say like Tampa or Dallas or, Nashville or Houston, or the Carolinas, like 60 units is going to be like $6 million. So like to buy that with your own money, you're going to need like $2 million. Okay. So then what most people do is they do smaller deals. And then what they're doing is they're number one is they're not leveraging other people's money. So they're buying, 10, 20, 30, 40 units. They're self-managing. So they're buying themselves a job. They're not leveraging professional management. When I did my first syndication, it was 250 units. And I was able to hire a property management company that had 37 years of experience managing thousands of units, where they take on the hiring and the training of the staff. They understand fair housing. They understand all the logistical nuances and red tapes and how to do evictions properly and stuff like that. So like I didn't have to go and reinvent that wheel myself. Okay. When I had 32 units, I kind of had to reinvent the wheel a little bit. And then I'm like, hey, this is a really big wheel. And I'm like teaching myself QuickBooks and stuff like that. So the property management company will also prepare all your monthly financial statements, your balance sheets, your P&Ls, your delinquency reports, your traffic reports. And so now your job becomes more of an asset manager, where you work with the management company to make sure they're optimizing performance and hitting the business plan instead of becoming the management company. So when you buy your own deals, not only are you not sharing in the upside, because like a typical deal I'll do as a GP, we'll do an 80-20 split. 80% will go to the LPs and 20% to the GPs. And they, like you said, if I put $500,000 in the deal, I'm making the same return on my $500,000 as the passive investors are. Plus, I'm getting essentially paid to be the GP for all the work that I'm doing. And that's how I'm 10xing my money. And so not only do you make more money, but you have more scale and you have better management. And think about this, part of our company mission is to uplift these communities that we own. And so by syndicating deals, you could control and impact more units. And we make these apartment buildings a place that the residents are proud to call home. Okay, so it's not just about making money, it's about uplifting and transforming communities. And most of these communities that I buy and my students buy are working class people or middle class people. And so we're impacting the workforce of America. And we really are. And it sounds cliche, but we really are. Like we're making an impact on that.
How do you pick like where in America you buy? And I know it's unique because you can buy not necessarily where you're at.
Yeah.
How do people actually find these deals across everywhere?
Well, you really want to pick great markets. And let me outline what I would consider a great market. Well, number one, and this is not in order, these are all important. So there's 4 or 5 things I look at. And number one is I love to be in landlord and business friendly environments. Environments where we as business owners have a fair shot. And so I try to stay away from areas that like have implemented rent control or have a likelihood of implementing like strong rent control policies. I like to be in environments that allow us to, legally evict people that don't pay the rent after, a reasonable amount of time, as opposed to, a period of several months. And, for people that may not be on board with that, here's what I like to say. Imagine I go into a restaurant and I order breakfast and I don't pay. Well, now I'm going to say, hey, you can't stay for lunch. Like, you didn't pay for breakfast, so I'm not feeding you lunch. But there are certain places in America that if you don't pay for breakfast, you still got to serve them lunch. You still got to serve them dinner. You still got to serve them water. You still got to let them use the bathroom, and they can stay and eat in your restaurant for days and days and days. And why is that? Well, you can't do it in a restaurant in California, but why can you do it in housing? And so, look, I'd just rather stay away from those areas. And so I like to be in areas that, hey, if somebody, consumes our product for, a 30-day period and doesn't pay for the product, that we could, move them out legally from using our product. So I love the landlord and business friendly environments. I love places that have above average job growth and population growth. Those are the two biggest economic drivers that impact multifamily performance. And I love looking at a number that I call the affordability gap. And the affordability gap nationally is about $1,300 a month. And what that means is, on average, it's about $1,300 a month more to pay a monthly principal, interest, tax, and insurance payment for a homeowner as it is to rent the monthly rent for a medium priced apartment. And so that's across the board national average. But if I could find markets where it's 1,500, 1,700, 2,000, there's some markets where it's $2,600 a month more expensive to buy that medium priced home compared to renting a medium priced apartment. And so what we do, Nate, is me and my team, I study the market. I work with some of the best data research companies. I invest in those people and their research that they put out. And then I could translate that to my students and say, hey, here's some of the top markets that we should be in right now.
You know what I'm really hearing loud and clear is you're on, in New York, you're in California, you can't evict people. My God, it's expensive. You may not want to be buying in your backyard if you're in those areas, but there's actually still the opportunities to GP and acquire in more, reasonably priced, better law areas, or passively invest in those same areas, rather than that feeling of you have to invest in your backyard, which really isn't the case, especially when we're talking about multifamily. Would you agree with that?
100%. And I have a lot of evidence of that. I mean, I have students that live in Massachusetts, California, Seattle, and they invest outside of those markets in some of the markets that I mentioned. So I'm just looking at my cheat sheet here, like some of the top markets. Let's see, some of the top markets that I want to look at one of my slide decks here. I did my 2024 forecast at the end of January. And, one of the questions I asked her, what are some of the top markets based on your formula, Brad? And here's just a few of them. Dallas, Tampa, Houston, Salt Lake City, Charlotte, Vegas, Raleigh, North Carolina, Indianapolis, and Nashville. And how did I come up with these? I looked at job growth. I looked at population growth. I looked at cap rates. I looked at rent growth. I looked at affordability gap. I looked at landlord and business friendliness. I looked at where people were moving to. And so I looked at about 10 different factors and came up with these top markets.
Love it. And so I know you've got an event coming up. I'm going to share a little bit about that right now. We're talking all about apartment investing, doing your own deals. What you got is the rat race to retirement. Could you tell us a little bit about what you got going on towards the end of this month?
Yeah. And, what I'm going to teach is, well, here's what is rat race to retirement? Well, number one, why do I call it rat race to retirement? I call it rat race to retirement because it's really, it was my personal journey. I mean, I shared with you already, I was in the corporate rat race. Okay. I was in the rat race for, 14 years. And then, when I started real estate, and then I worked for 3 more years doing corporate and real estate. And it took me 3 years to retire from my job. Okay. So I teach the step-by-step process of how I was able to go about, um, having a job and doing deals at the same time. How I was able to buy my first 32 unit and then 62 units and then a 250 unit syndication and then scale to over 10,000 doors in 22 years. Okay. And I teach a proven system. And so, can I go ahead and share my screen again here? Um,
Yep.
and so, what Rat Race to Retirement is, it's a 3-day event where I walk through, the exact framework that I have
Before
used.
you got to share your screen. And before we get to that, I just want to say, anybody that's interested in this, we're also providing some great helpful charts, information. If you want to do your own deal, you don't know how, follow this QR code and it'll take you to all of this information, especially to a link if you want more information about the rat race to retirement. And Taha, please, if you don't mind, drop it in the chat, the website that you can go to as well. But here's some great information, but follow this to get to that. And Brad, if you want to share your screen, I don't see it, so you got to pop it
Yeah,
up, and then I can jump over to it.
yeah. What I wanted to share is like, what am I going to be teaching at Rat Race? So,
There we go.
could you see the 4-step framework?
Yep,
Okay.
it's up now.
So look, I'm going to be teaching these 4 things. Plus, I'm going to be teaching the 3 ways to invest. And I'm going to do this over a 3-day period going from April 26th, 27th, and 28th in Dallas, Texas. So the first thing I tell people is before you invest, you got to understand what you're doing. You got to understand the numbers, the business model, the vocabulary, the formulas, NOI, cap rate, rent growth, operating income, operating expenses. And so that's step one. And so you will walk away understanding the deals, the business models, and the projections. Number two is once you understand that, you got to find deals. And I'm going to talk about where to find deals and where not to find deals. Okay. And then once you find them, you got to be able to analyze them. And I'm going to teach how to do a quick analysis. You will be able to analyze a deal within 60 seconds, a quick way to do it. And then that's going to be a way where you screen your deals. And then if the deal passes that screening 60-second analysis, then I'm going to show you how to do a more thorough 5-year cash flow analysis on a deal. So finding and analyzing deals, you're going to learn that at this 3-day event. You're going to learn how to fund the deals with the debt component and the equity component. You go raising the capital, securing the debt, and then we're going to talk about all the steps to close the deals and then what happens when you close the deals and how to effectively manage the deals as well. And as I already mentioned, I'm also going to have a special segment on passive investing, being a general partner, and doing your own deals with your own money. So, what you could expect to learn is all of that. And what this means is you're not going to be on your own. You don't have to figure this out on your own. And as opposed to like going to a 1-hour meetup or reading a book, you're going to be learning from me, who's been doing this for 22 years. I'm very active right now. I've done 57 deals. I'm in over 30 syndications right now. And my
Huge.
investor community is very active. And there's going to be 30 or 40 of my students also at this event. So you will be able to meet people that are actively being coached and mentored by me and talk to them and network with them and connect with them when you're at this event. And the other superstars that are going to be at this event are what I call industry professionals. And we're going to bring in some top-notch industry professionals. And Nate, you're going to be one of them. And why do
Excited to
I
be
do
there.
that? Why do I do that? Look, I'm not an attorney. I'm not a CPA. I'm not a mortgage broker. I'm not listing agent, in multifamily. And so I'm going to be bringing in some of the top people. So not only will you learn from me and my team, for those attending the event, you're going to learn from some of the top industry professionals out there. And you're going to be talking about topics related to, syndication law, which is very important.
How to use OPM, one of the most important things when you're trying to do these big deals. But I really want to emphasize for anybody that can attend, and it is live, it's in person, it's in Dallas, but there's also going to be a ton of people there to network and get to know that are out there trying to make things happen. The entrepreneurs of America, just trying to grow and expand their own books of business, their own real estate portfolios and opportunities. So anybody that can, completely encourage you to check it out. And the focus is how to expand your own business, which I absolutely love, Brad, what you're doing there.
Awesome. Yeah. I mean, look, I only do this event one time a year. And, for people that are skeptical, I understand. I was skeptical when I went to a seminar back in 2001. I was educated, but I said, hey, what do I have to lose? And, somehow most of what the guy was saying made sense. And for those that have been to my Rat Race to Retirement event, that's the same feedback I get. Like, some people come in and they're like, hey, Brad, I didn't know what to expect, or my spouse dragged me here. Of course, there are people that are really excited about coming too. Most of them are, but like, some people are hesitant. And I was in that same boat. But I can tell you, like, it was the best thing I ever did with my life. Was that, Kiyosaki says formal education can get you a job and specialized education can earn you a fortune. And again, you got to come at it from a committed place. There's no get rich quick schemes here. And there's no like, do one deal and make millions of dollars type of thing. This is something that what I've experienced as a mentor, and as a person that started being mentored, is if you're committed, you can achieve a lot more than I was able to achieve in corporate America.
I think that's one of the most important points. It's not, real estate is not a get rich quick scheme type. It is, people spend careers and decades building their portfolios, learning how to be the best, figuring out how to make it all happen. But it always comes back to community and education, because that's the way to go from spending decades figuring it out to be able to jump in and really make things happen so much faster for yourself.
Yeah, well, I agree. Like, we talk about leverage, when you get, when you buy your residence, do you buy it all cash? Well, maybe some of you do, but most of you are going to use, get 20% down and get an 80% loan. That's called financial leverage. And we do that in multifamily, but why not leverage other people's money and do bigger deals and have bigger scale? Why not leverage other people's experience? One of the questions I get asked the most is, Brad, I'm not experienced. How do I start? Well, if you're not experienced, my event is the perfect place to start. Okay. Like, you get experience by being around and learning from people with experience. So,
And
so whether
mentors.
it's like, look, and the other question I get is now a good time? And let me just say this, I'm going to answer this two ways. Anytime you have a goal, like if my goal is to lose weight, is it better for me to start today or in 6 months from now? It's always better to start today. Like, even if I'm, I don't know what a market cycle would look like if you were trying to lose weight, but let's say I'm about to go on a vacation for a month. Would it be better to say, hey, I'm going to start losing weight when I get back from my vacation? Or I'm going to be mindful, like, hey, maybe I'm not going to like dive into working out like 7 days a week and giving up alcohol while I'm on vacation. But if I know that I want to lose weight, I'm going to be mindful even when I'm on that vacation. I'm going to make better decisions, right? And so even if you're in a market cycle like we're in, but now I'm going to make the opposite argument. we're at the bottom part. If we look at a market cycle as a clock, where 12 o'clock is the top of the market and 6 o'clock is the bottom of the market, the way I see it, we're at least at 5 o'clock right now. Like, we may not quite be at the bottom. We may be, we may not be. I don't know. Blackstone just invested $10 billion in multifamily. Many see that as a sign that Blackstone believes we're near the bottom of the cycle. Again, I don't know for sure, but what's occurring for me is we're well past 4:30. We're somewhere between 5 and 6 o'clock, meaning that's where I believe we are. And what that means for us is that real estate is on sale. Prices are down. I can speak from direct experience as a buyer and a seller. Prices are down 20%, maybe 15 to 30% across the board, but on average 20%. So we could buy real estate for 20% cheaper today than we could yesterday. There's less competition. It's more of a buyer's market. Buyers are negotiating better terms than I've ever seen in a decade. So now is a great time to learn, build your team, and be getting into deals and making lowball offers. Well, we didn't make lowball offers for 5 years. And now, I'm telling my students, now's the time to make that lower offer. Okay. It is. And I know some of the brokers out there may not want to hear it, but hey, I just listed a property for sale, Nate. You and your team are reviewing my purchase agreement right now, and we're about to go to escrow. I'm selling it for $2 million less than I want.
Just to kind of throw out in terms of if you're interested in getting into real estate, it's been a tough 12, 24 months, give or take, because the interest rates are higher. What interest rates are higher means the value of properties have been going down. That's what creates the opportunities, but also what's been estimated, who knows if it'll happen or not, interest rates will start going down again. And that will naturally push up the prices and push up the acquisition value. So you actually, now is the right time because of the higher interest rates, because it is actually tighter, because it's not going to last forever. And that's exactly why the Blackstones of the world, at least in my opinion, are really looking heavily at this point of time to really get into the multifamily and get into the real estate arena.
Yep, exactly. Yeah. So look, and also the tax advantages, we are still in a bonus depreciation situation. So if you invest money in multifamily in 2024, you will get more tax deductions than if you wait until 2025 and 2026. It's a fact.
Could you describe what bonus deduction actually means? There's so many people just don't understand it. I don't understand all the tax ramifications.
Yeah, so I'm going to do my best to do this in at a high level. So when we buy a property, the government lets you depreciate the value. Depreciation is basically it goes down in value based on wear and tear. In multifamily, that depreciation has nothing to do with market value. So market value is I buy it at 10 million, I sell it at 15 million because we increase the NOI, the net income. Okay. But again, that $10 million property every year, the government on our tax return lets it go down in value at a certain rate. And what we do is we do something called a cost segregation study, and that firm will go in, and what happens is everything in an apartment building does not depreciate at the same rate. We have things that depreciate over 5 years, 15 years, and 27.5 years, hence the term cost segregation. And so what bonus depreciation does is all that 5 and 15-year property gets to be accelerated in the year of acquisition. It's incredible. It's a huge, and it's 100% legal. It was passed in 2017 by the Trump administration, and it is designed to be phased out by 2026. And so between 2017 and 2026, what it means is when we buy a deal, buy an apartment community, we get more depreciation now than we will after 2026. And we're in a phase out period, meaning from 2018 until 2022, we got 100% of all the 5 and 15-year property deductible in the first year of acquisition. 2023 was 80%. 2024 is 60%. 2025 will be 40%. And 2026 will be 20%. So you will get more tax savings this year than next year if you invest in a multifamily building.
Makes sense. Well, just before we end up jumping, I do want to share once again that you've got this Rat Race to Retirement. It's an event at the end of this month, but and that's where you get to mix and mingle with a whole bunch of other guys that are really focused on investing in real estate, both as the general partners, the guys making the deals, as well as a passive. But I'll say this, there's a time sensitivity to it. So definitely check it out now. However, I bring up this QR code. The link is in chat. When it's over, Brad's group has nonstop education, opportunities to network, to mastermind, to grow. So even when this is over, go check out the landing page, because we're going to have more information about how to get mentored, how to grow your own business in real estate, your own portfolio in real estate. So whether or not you're watching this in April, May, June, or on, check it out, and we'll absolutely be connecting you with Brad Sumrok and his Sumrok group. So just want to throw that out there for anybody that's watching this later on.
Yes, and thank you for that, because you know, and I may have missed this, but if we are past April 26th through 28th, you just go to bradsumrock.com. We have free training. We have a $97 home study. You can find me personally on Instagram, Facebook, and LinkedIn. And I still manage my own social, at least up until the date of this recording. And a lot of people ask, hey, Brad, do you really respond to your direct messages? And I do. So I invite you to reach out to me, go to my website. But if you're listening to this live right now or before April 26th, and you can make it to Dallas, Texas, I'm just going to tell you, you got to be at this event. And what I'm offering to people, if you come to this event and by the end of day 2 on Saturday, you don't see value in it, I'll give you not 100% of your money back, but 200% of your money back. I put my money where my mouth is. And why do I do that? Because I know you're going to get value.
Absolutely love it, and truly appreciate you joining today, sharing a little bit more about building your own real estate portfolio and just really making amazing things happen. I truly appreciate you being here today.
Thank you. It was a pleasure.
Any final words or thoughts before we jump on and jump out?
Well, I would just say this. A year from now, if you've been waiting on the sidelines, a year from now, you're going to regret it. Once they start lowering interest rates, like what happened with Blackstone, there's tens of billions of dollars of family office money, institutional money, even retail investors like us that are hesitant, waiting on the sidelines. And once they start cutting rates, we're going to be past the 7 o'clock period of the market cycle. Money's going to be pouring in. Prices are going to be going up. And I'll just say this. I don't know anybody in 2008, 9, and 10 that says, hey, I wish I would have bought less real estate. Everybody I know during that time wishes they would have bought more. And this is that time.
It's only been a decade of a bull market, and taking a little dip just is going to create more opportunity. So definitely want to throw that out there. And here's the guy that can show you the path to making millions. So thank you, everybody, for joining today. Really appreciate you. This will be up on YouTube if you happen to want to share it later. But Brad Sumrok, thank you so much for joining us today. Truly appreciate you.
All right, let's go, everybody.